Last Tuesday, we discussed about the start of the market correction. Once we have this increasing of the volatility and also increasing of the supply, the breakdown served as a confirmation signal that downtrend started. Here is a telltale sign that we discussed a few weeks ago. For example, there are exhaustion of the up momentum, progress to the upside is slowed down. Here is the picking up of the volatility, looking at the spread, the candle is getting more volatile, especially that we see a lot of the bearish spreads show up unlike before. Here is a nice and smooth uptrend. Most importantly, there's consistent supply coming out, especially after the breakdown. Look at all this consistent high supply level and continuation to the downside. Finally, I have a rebound yesterday. That is not too bad in terms of the strength, but we still see a bit of the rejection and right at this 5077, almost touching 5080. That's also the access line in the email talking about we could see a incoming rebound and then to test the 5080 access. There's a breakdown and then followed by inability to rally up. Look at this small candle, but high volume attempt to rally up, but got rejection. This is rejection right at this access line 5125. There is continuation to the downside on Wednesday with consistent high volume. On Thursday, also attempt to rally, but look at this rally and then rejection and close near the low. Finally, this is almost like a capitulation bar. This align to this gap right there. This is the first target that we discussed several weeks ago. It need to hit at about 5, tested the gap, and also this is the previous breakout point. So also tested this breakout bar. Here is a demand tail. That's quite encouraging. Look at the context. Here's a down channel. We have this oversold into this down channel with localized increasing of the volume. Yesterday, there's an attempt to rally all the way into the access line. The reason that I talk about the 5080 access line is because it's more obvious in this H1 chart, the hourly chart. Here is the access line. And yesterday, almost touching the 5080. Today, we need to see whether it can break above 5080. If we do get a commitment above 5080, then it could go up and to test the next access line. This is also another possible target if we can see a commitment above the 5080, because this is where the breakdown show up. If we see a breakout show up, and it should test into this area before we see the another reaction. If today is a straight off reversal, or if we see some increasing of the supply show up and then close in the middle or near the low, then there will be more downside follow through. The more meaningful targets that we discussed last Tuesday is still at about 4,800. This is still the targets that I anticipate for S&P 500. If you look at this consistent volume, here is a lot of the supply still showing up. This is impulsive move to the downside. Compared to the past, for example, last year from August until November, this is a pullback correction. In terms of the impulsiveness, this is also much stronger than last year August. Last year August is considered as relatively mild, but there are a lot of the stocks get hit quite badly. Look at all this down wave. It's relatively mild. We also discussed this portion compared to the bear market. This is super impulsive. This is different. That's in a bear market. This is a healthy correction. This is in between. By judging at the long-term trend, what do we see here? So here is a rounding type pattern. This is a well-established uptrend, a straight uptrend, and we have a pullback. This is a pullback or a correction in this large formation. Look at this structure where we have this swing high, and here is some reaction, and here looks like a more feasible location for the pullback. 4800 has been tested, have a bit of a reaction, and also acted as a access line. Look at this long-term structure. Once we have a breakout, and next will be a test or a backup action. We need to see the test, whether it would go all the way into this access line or it would form as a higher ground. That will determine the strength of the whole structure. So far, there's a localized increase of the supply, but it's not that threatening, unlike what we have in the bear market. Look at all this volume. I wouldn't be too concerned about the market crash scenario, at least for now. A pullback or a correction is long overdue, and this is anticipated and it need to happen in order for the market to have a sustainable bull run. The swing is still within this down channel. This is still a downswing, and it's important to see the reaction for today. A strong commitment above 5080. If we do get that, then the S&P to go to test the access zone somewhere around 5160. But so far, this is quite a lot of the high supply level that need to be tested. Even if we have a rebound, then I would consider it as a relief rally. The technical rebound oversold, then technical rebound before we have a continuation to the downside. Supply level is still too high. We need to see decreasing of the supply. Immediate direction, rebound is showing up, and we need to see whether it will have a commitment above 5080. If we do get that, then there will be continuation to the upside to test 160, 5160. If not, if it show rejection right at this level, then it could coming down or some consolidation showing up. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.